Hi everyone, welcome to Be Different for Success. Today we'll be talking about 8 reasons why you should invest in the stock market. Whether you're new to the stock market, thinking of getting back in, or just want a refresher on why to invest in stocks, this video is for you. Below I cover 8 major reasons why you should invest in stocks. Number 1. Invest in stocks to grow your money. This is the simplest reason to invest and is often at the core of why people buy stocks. When done right, you can grow the money you invest by anywhere from 7% to 10% per year over the long term. If you invest $10,000 in the stock market today and it gains roughly 7% per year, you'll turn that $10,000 into $20,000 in just 10 years. Think about that. 10 years ago, you put $10,000 into an account, invested it in some stocks, made some trades, and now you have your original $10,000 plus another $10,000 from investing. Or imagine a longer-term example, where you're both a good saver and a smart investor. You invest $10,000 of your savings into the market every year for 30 years. That's $10,000 this year, another $10,000 next year, another $10,000 the year after that, and so on for 30 years. So in total, you will have invested $300,000 in stocks over 30 years. And let's assume you achieve the same average yearly returns we used above, 7% per year. So you've invested a total of $300,000 over 30 years. But guess how much you have in your account at the end of that 30 years? You know it's going to be more than the $300,000 you invested over the 30 years, because the money you invested in stocks will have grown. But it's how much it's grown that's truly surprising. That $10,000 investment per year for 30 years would now be worth $1,010,730. Bottom line, through regular investing, you can turn $10,000 per year into more than $1 million over 30 years. Now, $300,000 of that $1 million is the money you directly invested each year, but the other $710,730 is money you made from investing in stocks. The point is not the specific numbers, returns, or time horizons. Those will all differ greatly from person to person. The important point is that investing in the stock market can make your money grow much larger over time, and that's the number one reason people invest in stocks. Number 2. Invest in stocks because historically they have gone up. Overall, stocks have tended to rise over the last 100 years. Yes, there have absolutely been nasty crashes, pullbacks, and periods of bad performance, but overall stocks have formed a steady march upwards as the US and global economies have grown. While there are lots of ups and downs along the way, the market has generally moved upwards. And if you bought stocks and held them for 30, 40, or even 50 years, you would have made a lot of money. In fact, just one single dollar invested in the shares of small companies in 1926 would be worth nearly $40,000 today. Many people invest in stocks simply because the odds are in their favor that the market will go up and earn them money. Number 3. Invest in stocks for the power of compounding. I showed the power of compounding a bit before, but here's the basic concept. If you earn a good steady return on your investments over a long period of time, like 30, 40, or more years, that investment grows way bigger than seems possible. For example, we covered above how investing just $10,000 per year for 30 years while earning a 7% yearly return turned into well over $1 million. But let's look at an even longer timeline. Let's say you followed that same strategy, investing $10,000 per year and earning 7% returns per year for 60 years instead of just 30 years. Now your regular investment of just $10,000 will have grown to an astounding $8,104,668. Yep, there's a reason people often call it the magic of compound interest. Here's the bottom line. If you start early, save steadily, and invest intelligently, your money can grow in truly amazing ways over time. Number 4. Invest in stocks because money sitting in cash will lose its value. You've probably heard of inflation before, but it's sort of a strange concept. To put it simply, think of inflation as the slow but steady force that makes things cost more over time. Remember how your grandfather could go see a movie for $1? Well, now it costs you $10, $15, or even $20 to go see a movie. That's largely because inflation makes the price of products and services go up over time. What that means for you is that your hard-earned money is slowly losing its value over time. Terrifying, I know. For example, if you save $10,000 this year and put it under your mattress for the next 30 years, it won't be $10,000 when you take it back out. I mean, yes, it will still be $10,000 US dollars, but it won't be worth what it was worth when you first earned it. So if your $10,000 today could buy you an incredible trip around the world, in 30 years when you take it out from under your mattress, it may only be able to buy you 2 nights in a nearby hotel. Inflation can vary over time, and I'm not going to get into too much detail here. But just remember this: when your money is sitting in cash, it is steadily eroding in value. How fast does it erode? That depends on the current rate of inflation. Since the year 2000, the annual inflation rate has mostly been between 1% and 4%. That means every year your money's buying power erodes by 1 to 4%. If you buy treasury bonds or put your money in a certificate of deposit at your local bank, you'll probably earn just enough to avoid inflation. But even that's not a great deal, because in the stock market you could earn so much more. Number 5. Invest in stocks because you'll make more than other investments. Looking back at history, stocks have earned more wealth for investors than most other investment options. On average, investors in the US have profited more from buying stocks than from buying bonds, buying a home, or most other investment options. One exception may be investing in residential real estate. For example, buying an apartment building and renting out the units to tenants. Research suggests this could return nearly the same as stocks over the long term, once you consider both the slowly appreciating value of the property and the value of the rent you collect. Number 6. Invest in stocks because they're easy to invest in. If you're fortunate enough to have some savings, you're faced with a wide range of places to invest your hard-earned cash. You could buy real estate, buy bonds, start a small business, invest in a mutual fund, collect precious coins, and much more. What's great about stocks is that they're relatively easy to invest in. Now, there's definitely research to be done along the way to make sure you're making the right investments for you. I'm not suggesting you buy some stocks and just forget about them. But compare buying stocks to buying real estate or investing in a small business. Stocks are fast, easy, and cheap to trade, whereas real estate and many other investments are not. Stocks are often called liquid assets, which just means they can be turned into cash relatively quickly. For example, if you had $1 million invested in the stock market at 3 p.m. on a Tuesday, and you wanted to get all your money out right away, you could most likely turn that $1 million into cash in a few minutes with just a few clicks. On the other hand, an illiquid asset may take time and money to turn into cash. Think of owning a highly valuable painting. It would take you months and likely some money to find the right buyer and sell your painting at a fair price. A lot of people invest in stocks because they feel like their money is never far away and can always be called home in an instant. Number 7. Invest in stocks for diversification. Buying stocks allows you to diversify how your money is invested and how you make income for yourself and your family. What does it mean to diversify? Basically, the more ways you have to make money, the less you're at risk from getting in financial trouble if any one method gets disrupted. For example, let's pretend you have a full-time job, rent out an extra room in your house to a college student, occasionally do handiwork on the weekends, and invest in dividend stocks. If any one of those sources of income were to dry up, you wouldn't totally lose your income because you have some diversity of income. The extra room rental and dividend stocks could help carry you through a rough patch. It's the same concept with investing. Owning stocks can diversify how you earn returns on your money. Number 8. Invest in stocks to learn. Investing in stocks will teach you a ton. You'll learn a lot about the stock market and how companies work, what makes them succeed or fail, how products come to market, how economies impact companies, and much more. Plus, you'll learn to think in new ways. Investing in the stock market requires logic, analysis, and thoughtful reflection. Practicing these skills with investing is sure to sharpen them in other areas of your life as well. Closing thoughts. Honestly, investing in the stock market is about learning, having fun, and making money. Of course, it's not quite that simple. You can't just throw your money in the stock market and expect it will automatically grow. There are many risks, pitfalls, and challenges along the way. And the stock market isn't right for everyone. It takes commitment, patience, smart decisions, and steady work to make your money grow over time. Skip out on any of those things and you'll risk losing money in stocks. But overall, I think the stock market is one of the greatest ways to grow your wealth. And it can require relatively little effort on your part. Thanks for watching this video. I hope you liked it. Please click the thumbs up and write your personal tips in the comments below. Thank you for your support. And don't forget to subscribe to the channel if you want to hear more from us. See you in the next video.